All right. Excuse me. Hey, great big good morning to everyone again. Today is May, what is it, the 17th, 2023. Looks like we're getting a little bit of a boost in the market here based on the SPY. There's that little off color, whatever pink, hot pink, whatever that color that is, fuchsia. That's the pre-market candle there. You can see it popping up, but it's certainly not doing anything great. Okay, it's not doing anything that we haven't done here in the past, and then throughout the day we just kind of wobble around and go nowhere. Is today going to be the day that we actually go somewhere, whether it be a pop to the upside or a pop to the downside? I wish I could tell you. I really do. I know that whichever it does, I will be taking advantage of that. So whether we have the bearish move down or the bearish move up. Right now, because price is above the T-line and the T-line is above the trend indicator and we're above the 50-period moving average down here, I'm going to have to give the SPY to the bulls. They're playing with fire, but to the bulls. If we take a look at the diamonds, I'm going to have to go the other way with that one. What I like to do is follow what price and the trend is doing. And right now, you can clearly see the trend is down, but not just that. I use moving averages and price to help with that rather than a line like this. So let's just get rid of that. There we go. The red dots, that is our trend indicator. And the black line is the T-line. The T-line is below that, so that tells me that the trend is moving down, and price is below the T-line, so that tells me the trend is moving down. So for the diamonds, I see nothing but bearishness. Now, can we pop up and put a bottom in here and rally up? Maybe all in one day, maybe in a couple days. Sure, but we don't want to trade on well, maybe, sure. So let's say that you want to be a bull on the diamonds here. What we need to see is a bull candle, a candle that says I'm a bull, a big candle, an engulfing candle, a gapping and holding candle. We want to see follow through. So this candle right here, if that's the way it was, if it does something like that today, if it does that, okay, I'm a bull. But now we really don't want to trade that. We can certainly get ready. And there might be charts out there that are doing better, that are doing exactly what I'm about to do, and they could be traded. But we want to see that follow through. Follow through over that previous candle. Now we have a bull. Well, things don't always work out that way. They really don't. So we could actually end up just putzing around up here and then continuing down. And right now, this is where the force is. The force is to the downside. So a little caution there. IWM is still bearish. I'm just basing that simply on where price is, where the T-line is, and where the trend indicator is. So price is below the T-line, T-line's below the trend indicator. It's so super simple. That is really third grade stuff. Anybody can follow that trend. And right now, the trend is bearish. I look at the chart pattern. I see a hammer here. I see a gap up, and I see a sideways move. One could look at that as possibly bullish. Well, it is. It's a bullish setup, but it is in that early stages of it, and price is the drag here. Price needs to be up here. Long as price stays down here, we can walk sideways all you want. You can call that a bullish setup all day long. But price is the big drag right in here. What else do we have? SMH yesterday, very nice. Day before, very nice. It looks like it's going to be nice today. IYT, the transports pretty much suck pond water. So this is going to be a big drag on the market. While SMH, it might help the market, IYT is going to put a drag on the market. So what's that going to do? The same thing that we've been seeing the past several days. Chop, 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 chop. Now that's not to say that there's not charts out there that could be traded. We know there are. Let's take a look at a few of those. Move that over there. Take a look at Ever. EVER. Ever, we've got a low, high. We come back for a higher low. We're breaking out here over the trendicator. Trendicator dots have turned green. The value of that is if price turns that dot back red, you don't want to be in it. I think the value of knowing that, the value of understanding that as something that can save you from disaster, I think is worth millions right there. That one little thing right there. Target-wise, you guys all know where my target is up here on these type of charts. We'll talk about them more a little bit later here. And just a beautiful little chart setting up here. Space. Take a look at space. Space looks like it's on its way to the 200 period moving average here, which that puts you in the neighborhood of 10-12% up there. And it could slide, squeak a little bit higher up there before it settles down. Boil. Boil is still setting up. Now, I'm not in Boil. I'm in UNG, which they're the same but different. And that's still looking like a nice chart. All trending charts, every trending chart in the world, every trending chart from the beginning of stock trading, if it started down here and if it ended up here, every single one, there's your trend. This is what it looked like. Rallied up and pulled back. Rallied up and pulled back. Maybe even pulled down a little bit. Fought to move up and then pull back like that. So what do we have here? Low, high, higher low, higher high. That's what this is. Low, high, higher low, higher high. I just do that as a dip to the downside. So long trends start with little trends. I'm not saying this is going to be a long trend. I'm not saying that at all. What I am saying is there's the start of a trend, just like you have a start down here. And if this continues as time goes on, this corner will move to that corner. And if this continues to trend upward, what we're going to have is a trend that looks like that, with the ups and downs in the chart. Another nice one, let's take a look at Amazon. Amazon is still working out pretty nice here. Trend moving up, little consolidation right here, and it looks like we're trying to break out of that consolidation. Here's a weekly chart. I gotta tell you, I love the weekly chart. The rounded bottom breakout to me is one of the best charts out there. Strategies. It just has so many good things about it. And we are in a weekly rounded bottom breakout. That makes the target up here near the 200 period moving average. That chart, you can see it trending. It's still working. We move to the daily for our entries. For those that like intraday, you can certainly do that intraday. But Amazon right now still looks really, really good. 3M. I'm still short 3M. See, have I closed some of that out? No, I haven't. So if we do get a little bullish, I'm likely to close half of it out. Currently up 25.9%, which if this pops up, it won't be that much to close yesterday. I'll get rid of half of it, then I'll let the other half work and see if we can't get down here a little bit lower. Oracle. Oracle seems to be working out. This is another one that I'm holding, currently up only 7.5%, but on 6 contracts, that's $450. man, I'll take that all day long. Good looking chart here. Still looks like we move a little bit higher, so we'll monitor that one pretty close. Let's take a look at snow. Snow still looks terrific. Excuse me. Snow here is taken right off. Challenge these tops up here. You know, I get it. Somebody wants to buy it in here, or maybe you want to buy it on the breakout. Everybody's a little different. Every trader has their own little, this is what you like to do. And I think that is very powerful for each and every trader to have that. Extremely powerful. Right now, this is setting up. We've got that 3-8 trap going on. 3-8 trap, one of my favorite entries. Entry mechanisms, I guess, is a way to call it, right in there. So snow is looking pretty good. Let's take a look at one more. Let's look at Starbucks, because I almost shorted Starbucks yesterday. If Starbucks can show some weakness, I will hop on that as a short. I looked at it yesterday. The thing about Starbucks is this thing, you know, this is like a cult kind of stock. And sometimes I don't think it likes to be shorted. It hurts its feelings. And then it comes back and roars up. So you got to be careful with this thing. But if it does start to close below that 50-period moving average, I think that's what I'm going to use right there, is that 50-period moving average. We get below that, I'm going to look at that as a short, and I'm going to keep a tight stop on it. Because this thing can get out of hand real quick and start jamming to the upside. So we'll keep a look on that short. All right, our favorite charts to look at, T2123 this is not pre-market, so pre-market it would be up a little bit based on what the market is doing. 15-minute chart is still bearish. Hourly is still very bearish. So we've got a ways to go before the hourly turns up. And the 15-minute can turn up pretty quick, but it takes it a minute to get that hourly up. So we're still underwater. I think we ought to be cautious. All right, everybody have a wonderful day, okay? Thank you very, very much for being here at pre-market here. Remember that John is in the BYOB, and it's an open house today, tomorrow, and Friday, and you're welcome to go over, check him out. You don't have to stay over there all day. You can come back over here. You can go back and forth. Anyway, whatever you want to do, okay? Hey, thanks, everyone. Take care.